Good morning, traders. Today is Halloween, October 31st. It is 8:42 a.m. and today we're going to go over the morning ideas. Okay, so first thing is it's a new week here, so let's always make the habit of going at the beginning of the week, always going. There's a million different places you can do this. I've always used Forex Factory. I know there are better ones out there, so before you start throwing the knives to tell me there's a better one, I know that it's just the one I'm comfortable with, and I always filter this, guys. If you're going to use something like Forex Factory, filter it for the whole week and then just the red items and only USD. So that's the one I use, and we can see here that we have the FOMC statement on Wednesday, and we have non-farm payrolls on Friday. So it's a very busy week for our geopolitical news here in the U.S. Now, of course, like the FOMC statement, other than like the CPI now is carrying a lot of weight, but FOMC statement and non-farm payroll, non-farm employment change are the biggest ones, the biggest movers of the market usually. So when we have a week like this, what tends to happen is the market tends to slow down a little bit in front of the Wednesday statement, just because if you think about it, and I always say that if you're a fund or you're trading, a big book, whatever, you don't really want to take a stand in front of something as important as the FOMC statement, even though this stuff is already kind of priced in. I know that we're looking at another rate hike, potentially. And a lot of the market's already priced that in. It's not like if they get a rate hike, the market's going to go wild. It's really if the rate hike is as much as the expectation. And I just don't really like trading around news. I never have. I think it's a difficult thing to do, especially with a smaller budget, because you just can't withstand the heat from the market going a long way. Because remember, there's not as much. Uh, there's not as many orders in the book, so the order books become much thinner, so the market could go a lot further. Even in a product like the ES or the NQ, that are typically thicker products, we don't tend to see nearly as much volume in the order book in front of those meetings. So we recommend and for our traders to stay out of the market at 2 o'clock and wait for the market to settle down on Wednesday. But that's just a look ahead. We had a trend up day on Friday, and this is the typical trend up profile. We opened. I didn't expect to see this trendy. We tested down first, and then we kind of rallied the rest of the day. You can see that we stayed above the VWAP all day, and we didn't even come close to coming back to it. The profile that we leave behind is this toothy looking profile where the market cannot find sellers. We move up, we trade a little bit, we move up, we trade a little bit, we move up, we trade a little bit, and we close near the highs, the volume point of control going all the way to the high. This usually means that this auction is not finished yet. So what I'd like to see before looking for shorts, if this market pulls back and tries to fill in some of this profile, that's fine. But I'm looking for the market to finish the auction and see the buyers shut off at some point before I start looking for shorts. That's my personal opinion. And this is what I'm looking for. I'm looking for some kind of a continuation of this move today. So maybe weakness off of the open for us to take, if we were to open here, for instance, and I know we have an hour till open, is to see some kind of a push lower to take out the overnight low first, and then start to push higher and take out Friday's high up here at 39. Let's just call it 39.25. If we look at the bigger picture, we can see here that we are up against, again, the second standard deviation. We're kind of like riding the band higher. This is showing a little bit of strength here, especially after the pullback from the second standard deviation didn't make it all the way to the VWAP. And now I start looking at maybe some of these earlier, pull out our fixed range tool and start to look for some earlier areas, see if we can find something from before. You can see that we've pushed into a pretty thick area. The next area above, you're looking at like this VPOC over here, 39.80. to about, you can see that the volume kind of shuts off here at about 4,000. If the market would get to 4,000 would be, for me, the, the like the longer term, you know, target, if you want, if you're long here, as if the market tries to slide up the second standard deviation band up towards 4,000. That's where that volume shuts off. Now, if the market were to get above that, you would expect it to slide pretty quick, to push pretty quickly, because you can see that we don't have a lot of volume up there. The markets tend to move pretty quick in those areas. Okay, so that's really what I'm seeing from a technical standpoint. Now, again, that's the technical standpoint. We're not seeing, um, who knows what's going to happen, with the news coming out this week, the fundamentals. I know that, a couple of the big tech companies have already posted earnings. We got a couple misses there. Again, a lot of that stuff is now already priced in. The volume is pretty low overnight, and today is the last trading day of the month. And we remember, I said this last week, we are up for the month. We opened the month down here, we're up here. I expect to see the market kind of holding on to these gains for the month. So I don't see today being have much risk of being a down day. I'm looking to buy weakness today off of the open for some kind of a push, get that window dressing, get Friday's high. Let me switch back to the smaller picture, the 15-minute. I'm looking for some weakness, to buy some weakness today at some point, for the market to push and get a part of, for me to be a part of that window dressing and the closing of the profile from Friday, at higher prices. I don't know that we'll get to 4,000. That's 100 points away. We certainly don't have the volume for that right now. If I were to turn on, something like average daily range projections, this is looking at the last 20 days. The projection showing we have enough. If we have 100% volume, usually the average would be around 439.88. You can see there's a red target above. That's what these red lines are, just giving me kind of a projection of how far the market could go if the average daily range is about, some people call it ATR because you're looking at the full session. If you could push higher, where would the target be? Where would the market feel stretched? It's about that area where we're looking for, definitely for the market to, settle down. If it moves higher, I don't see it moving much past 4,000 if we even get that far. The volume really needs to pick up for us to get that far. I don't know that it will in front of such a big meeting on Wednesday. Maybe we get a kind of slow for a couple days this week as we wait for the meeting minutes on Wednesday. However, I don't see a big risk of a big sell off here on the last day of the month. Okay, I know that was long winded. I'm really sorry, but that's what I'm looking at in the new week. We went over some of the news events. If you guys have any questions, please let me know, and I'll stop it there.